Hello everyone, welcome to the RR ratio where we focus on chart-driven technical analysis. Today's video is about stop overcomplicating Bitcoin cycles and what the data actually shows. We have seen Bitcoin falling down to 63. At this point, when it was at 66, there was a narrative going on that we are back in the bull market, and the bottom was 57. The same narrative was there when we hit here at the price of 60,000. This kind of narrative keeps repeating over the whole Bitcoin's bear market. During the Bitcoin's bear market, every time we see a drop, the narrative follows that we have seen the bottom. Now, this really makes Bitcoin's chart, let's say this makes it complicated to analyze Bitcoin's chart when you have so many people saying that we have already reached the bottom. Now, why is it difficult? Why do people fail to, let's say, simplify Bitcoin's price action? And I think one of the reasons is that in past years, Bitcoin has made these parabolic rallies, and that kind of rally did not happen for the year of 2025. People were expecting it to cross 200,000. Some of them were expecting it to cross 500,000. But we reached only up until 120, 124. And then we saw Bitcoin's price going back to retrace some of the price action in the lower, let's say, 90s, 90,000, 80,000, and now we are in 60,000. The easiest way to analyze any chart is to break it down from yearly point of view. So if you are working with Bitcoin, take its history, pick up the cycle high. Let's say you pick up over here, you say this is the year where I pick up, it's December. If you move it to January 1st, you say, all right, this is how I will start analyzing. And then you pick up another January, and so on. You place another here, another one over here, which would be January of 2022, and then you think like, all right, my analysis shows from one peak to the next peak. Over here, you will place another one, which would be January. That is again one peak to another peak. There was this peak again, and here I would place it also in January, somewhere here. So approximately, if I have to look at just this peak to peak, the pattern is clear that before the year begins, in the last quarter, we have the top of Bitcoin for that particular cycle. And then you calculate further, how long does it take? You start putting the lines where the bottom has formed, and then you try to, based on this time period, you try to see where the bottom might occur. And this, looking at this chart from cyclic point of view, by dividing it in different time periods, it's much easier to see when we are in a bull market and when we are in a bear market. Now, all of these lines, that's a way one can start dividing the price action and trying to understand in which trend we are. Are we in a bullish market? Is the price going up? Are we in a bull trend? Or we are in a bear trend? Right now, this price action does not tell us that we are in a bull trend. Now, based on the same idea, we have this model of accumulation lines and distribution lines. So the model is quite simple. These lines were computed based on halving, and halving is key to Bitcoin's fundamentals. So what does this model tell us? Every time the price crosses the distribution line, consider that we are in a bear market. Price will be distributed. That means the Bitcoins will be sold, and people will continue to sell Bitcoin up until at least the price crosses the accumulation line. Now, after the price has crossed the accumulation line, we can say by some confidence that we have entered the period where people will start buying Bitcoin. Now, when I say people, it could be large institutes, it could be banks, it could be a group of people, or just individuals who are interested in buying this asset. So this model basically tells us that the price, which was in September or in October 124, that was very close to the distribution line. Just after a few weeks, the price crossed the distribution line. And if the price is so close to the distribution line, my understanding from previous cycles would tell me that I need to get out of my long position. I need to start taking profit. Or if I have entered at the very late stage, then I should take some loss and get out and preserve my portfolio. That's how you maintain your risk and identify what is your reward. Right now, the reward is not looking that good. Imagine if someone bought at this point because for whatever reason they did not know about risk to reward analysis. They are right now, even after this shock pump, they are still 44% down. But if you look at it from a different point of view, all right, I have taken my profit. Now I have some capital. What should I do with my capital? And if someone is not doing short trading, leverage trading or something, the best thing, at least in this Bitcoin market, at least in Bitcoin as an asset, is to wait and let the price cross the accumulation line. Now, accumulation line does not mean the bottom has already occurred. What we see in previous cycles, in this one, from the close, yes, bottom had occurred. But if you look at the wick, this was the bottom. The bottom happened after the accumulation line. This 2015 is slightly a special case, and I'll show you in a minute why this kind of action has happened. But if you look at the price itself, the bottom happened after 2015. Over here, the bottom happens after the price has crossed the accumulation line. This happened in December 2018. The bottom here happened in November 2022. basically in the midterm years, which is this year, what is midterm year referring to US elections, tends to be the bear market for Bitcoin. And the bottom happens in the last quarter of the midterm year. So before the year ends and the last quarter is where bottom usually happens. Then I will switch on pre-election year line. That is basically start of the next year. And this narrows down the period where bottom is most likely to happen. This brings us for 2015. The accumulation line was after the pre-election year. So the accumulation line was in January. And that's why there is this flip here. But if you would take the absolutes and think that the bottom is between these two lines, then you can consider that this bottom between these two lines was a valid bottom. However, from price point of view, this was the bottom. But the difference is marginal. It's few dollars. In 2018, the bottom happened between these two lines. That was in December. 2022, in November, between these two lines. And now we are in this period where we have the bottom from between September and December. Now this gives us a quite a sensible range of time period when is most likely the bottom of Bitcoin for this cycle. Now what would I look at in price action when the bottom happens? There are various types of capitulations where Bitcoin's price might just go sideways and then we will eventually cross the accumulation line, and now price might just drop 20-30%, and that would be the bottom. Or we might see a drop, a sideways, and a drop sideways, and that would be already accumulation time to accumulate. If I add the idea of order block, the theory of order block, here I would say I have a fair value gap, and this brings me in the range of 44 to 50. There are other aspects from the order block theory where I would say this one, which is the breakout structure, and here we have another fair value gap. So breakout structure is at 30. This fair value gap is at between 43 and almost 50,000. Now these are various price-based capitulation. If the price drops from here directly by 30% tomorrow, this is already price-based capitulation. Then it's good to wait a while to see if there is also time-based capitulation, which eventually will happen because we are very close to accumulation line. And if these two capitulations happen at almost same time, which usually happens over here, we see this as a time-based capitulation. That means Bitcoin price goes sideways, makes a huge drop, goes sideways, another drop sideways, and then the final drop before the accumulation period begins. And these drops are price-based capitulation, and every price-based drop is not the bottom. We have to keep that in mind. So we do have now the time period where Bitcoin is most likely to bottom. Now what if this is the bottom, right? What if this thing of 57, which a lot of people say, yeah, the bottom is in. Even then, taking a risk at this point is not worth from the reward point of view, because historically price has always dropped. There has been always price-based capitulation after the price has crossed accumulation line. Now, if the price stays like this and it does not move much, then it has a break of structure over here. To me, I would take an entry for long at this point, because now my risk to reward ratio is quite in a profitable region, because now I know that we are in the bull trend, and even if there are flash crashes, the price overall is going to be an uptrend. But today I cannot confidently decide whether 57,000 was the bottom. The price-based capitulation might have happened, but the time-based capitulation is yet to happen. So both the things need to happen. I think keeping these 2 points in mind would be my way to approach the market. And if you like the content, then do hit the subscribe button. I will see you in the next one. Bye-bye.